Welcome everyone to the daily Ulti portfolio update. Today is Wednesday, October 22nd. And as I'm sure you saw in the thumbnail, or if you saw my post on YouTube from earlier, I have sold out of Ulti. I've thrown in the towel. I've taken what I think is going to be around a $200 to $300 loss on this trade. The NAV for me was continually declining, not eroding, but just declining from bad timing on these trades. We'll get into a lot of those later in this video, but short summary is that I don't see a way out of this anytime soon. I think it's going to be a very choppy ride unless the names in this portfolio can somehow turn it around. But the continual decline, the concentration in some of these crypto stocks, the decline in the quantum stocks has got me worried, and I just want to take a cautious approach. So I've sold all my Ulti and I don't want it to go down any further, and that's why I've sold. I will still, of course, continue making these video updates because I'm in some ways attached to Ulti. I find it fascinating and I enjoy looking at it, but I don't enjoy looking at it and knowing that my money is continually going down. So that is my little spiel on that. Yeah, we'll get into this, and as we look at some of these trades, maybe you'll come to the same conclusion as I do. Of course, I never recommend anyone to buy. As we always talk about, it's very risky. Yeah, here we go. So today, average stock was down 5.63% today. At one point, this was 9%. I was monitoring this all day, and at one point, we were down 9%. We only had one winner today, which was Rocket Companies. That was up 1.76%. And if you have seen my video that I recently posted on Rocket Companies, we don't even want this stock to trade at $17.34 because they've sold a call at $17, which means if this stock trades above $17.34, they could get assigned that call, be forced to sell their shares. Someone could buy Rocket Companies from Ulti at $17 and flip it at $17.34 and take a profit, and Ulti would take a loss because their average price is somewhere around $18 to $19. So we don't even want this stock at $17.34. So again, it's very bad. The big losers on the day, Cipher Mining down 10%, Rigetti and NewScale down around 9.5%, 9.8%, Symbotic 7, a lot of 7s and 6s. The average here was almost down 6%. So really a bad performing day for Ulti. Ulti itself was down 3.9% today, closed at $4.93. At one point, the low looks like it was $4.88. So pretty bad there. I've done this table here at the bottom, which is the price last Monday, October 31st, the opening price. October 13th, the opening price, and today's price, and I've calculated the delta there. And from last Monday to today, only 2 stocks are up. The rest are all down. You see, we've got some that are, double digits down. Let's take a look at what the average is since October 13th. The average is down 10.86%. The median of this is 11.92%. So we'll round up to 12 and say that half the stocks are down more than 12% since October 13th. If we change that to just Monday of this week, change that to the 20th, we'll see that the average is down 9.7 and the median is 9.09. Only 3 stocks are up. And these quantum stocks have been really taking a huge beating. So just overall bad timing in these trades. Some of these stocks are not good. And I'm looking now at the equity stat portfolio, which tracks the trades since early September. And we see just how bad the portfolio has been doing. They did sell 2 positions today. They traded out of Pony AI and they traded out of Figma. So actually we can talk about those. Figma, they sold everything and they took a realized loss of $22.8 million. If we look at, let's go to, where's the Figma? Here it is. If we look at just Figma options credit, they placed a few more options trades today, but this was just selling a put that they had bought earlier and closing out a call that they had sold earlier. They're out of this position. The total options credit, 7.2 million. So the net profit on this was the net loss was 15.4 million, down 12.9%. So you can see that the options cushioned the blow here a little bit, but not by much. Pony AI down 16 million. They took a $16.7 million loss traded out of that stock today. Let's take a look at how those options offset that. So Pony AI over here, options credit of about 6.4 million, net loss down 9 million, down 8.59%. So you can kind of see how I was coming to my conclusion that this is just not a good time to be invested in Ulti, because not only are the stocks going down, but the options credits are not enough to offset the loss in the stocks when they fall this much. Anything else from this screen that I wanted to go over? We'll just sort, I guess, today of the stocks that I tracked, down about $45 million. BMNR is not looking good. Symbotic's not looking good. None of these. qubt down 6.5 million in one day. Not good. Let's go over to the Lucid trade and see how that's doing. So Lucid, they did place, what did they place today? They closed out a call and they sold another call at $21, expiring on the 24th. Today collected 900,000 there. Net collected 630,000, so increased their options credit by 630,000 to 5.5 million. So they are down about 17 million total on this trade, down 22.58 million, and then the options credit offsets that. I do want to say though, this morning I listened to a Spaces call with Mike Venuto and Michael Coe and Wolf Financial. I'm not sure really what Wolf Financial's affiliation with YieldMax is, but Mike Venuto is the, I think, chief, let's get his title. Michael Venuto is the chief investment officer of Tidal, which is kind of like the administrator for Ulti. And then Michael Coe is a YieldMax strategist, or I think that's a new title that they have, YieldMax strategist, and he is kind of like the front-facing guy for YieldMax and Ulti. And I had the opportunity to kind of listen into this Spaces call with, I think there are about 600 other people on the call, and just hear what their thoughts were on YieldMax. And unfortunately, they didn't really talk that much about the underlying stocks within Ulti. They did address some questions about how Ulti was doing, how Misty was doing, and the declining NAV, but they didn't talk about, why there are 6 crypto stocks or what's the deal with the quantum stocks. So I was a little bit frustrated by that. I tried asking a question. I hit the button to request to speak, but I was never called on. So I messaged Wolf Financial, who hosted the call, and they said they could allow me to ask a question next time. They were just a little busy with questions on the call. So I'm going to try to get a question in next call, but I did get the transcript, and I highlighted one thing that Mike Coe said, and this kind of actually ticked me off or rubbed me the wrong way when I heard it. And it's basically, he said, quote, "It's on you guys to take that and pair it up to the risk that you want." So he's just kind of talking about how the underlines of Ulti were going down, and you can expect when the underlines go down, Ulti goes down. And then he says, Quote, I was speaking with an investor this weekend who reached out, and he's like, look, Michael, I really like this strategy. And they were talking about Ulti. What I've been doing is taking the 80% distribution and making it 60% by buying puts on the underlying 20%. And I haven't felt the pain. And then he says, they haven't done a product like that because they don't know what people's risk tolerances are. And I kind of thought, well, look, Ulti should be a standalone product. I should not have to manage it. I get that it's, a hedge fund-like structure where they get to choose what stocks they own. They have discretion when to buy. It's actively managed, and they write options on it. But I shouldn't have to go out and buy puts on the underlying portfolio. That's what Ulti's doing. They're the options trader. The YieldMax are the options people. And I think earlier in the call, people were, or maybe it was Mike Venuto or Michael Coe was also mentioning how, look, if you buy Misty and you're not happy with that, or there's the Winter ETF, WNTR. That's kind of like an inverse of Misty or strategy. And Salty, SLTY, is kind of like a anti-Ulti. It takes short positions. And when you buy Ulti, the solution to the NAV going down or the price declining, in my opinion, shouldn't be go out and buy another YieldMax product to offset your current YieldMax product. Or in other words, pay us more management fee. Because what is the Ulti management fee? What is it, like 1.29%? Or the gross expense ratio is 1.4%. Oh, there we go. Let me put it into view. Okay. So if you guys can see that, management fee 1.24%. And then they've got other expenses, 0.11% and acquired fund fee. And I wonder if do they break that out into like operating versus managing? Anyways, if you're paying 1.24% and your total return is only like 5% or whatever it is right now on Ulti, it depends on where you measure it, but the example they used in the call was like 5%. If you're paying 1.24% to get a total return of 5%, and if you're up more than that, let me know in the comments, but then I think that's just not good. I don't want to pay 1.24%, and then if I have to manage that position by buying puts on the underlying, I still have to pay 1.24%? Or if I'm not happy with Ulti, I should go out and buy Salty and pay them even more fees? No, I think YieldMax, and I'm ranting here, so I apologize, but I think YieldMax should honestly waive this fee in its entirety until the NAV gets back to $6. Comment below, let me know if you agree or if you disagree. But I think until Ulti gets back to a $6 NAV, they should waive this management fee because no one wants to pay for the performance that they're getting now. And I get that they have to, pay people. They have to operate the fund. There are commissions and all that. But, generate that from your options income. Play some more options trades, generate the income that way. That's my initial thoughts right here. So let me know what your guys' thoughts are. If you've sold Ulti now, if you're planning on it, or if you are continuing to hold. I'm kind of interested to hear from the people that are still holding on to it. Like I said, I'm going to keep covering this fund, whether it goes up or down. I'm interested in it, disappointed in it, but also more disappointed in myself for not kind of recognizing sooner that maybe I should have gotten out or just taken a slower approach to buying. I did throw in some big slugs early on, and maybe if I'd dollar cost averaged over a few weeks or months, I'd be in a different place. So, on me for maybe just not thinking about it thoroughly, but you live and you learn. And at the end of the day, it wasn't too costly of a mistake or too costly of a lesson. So thanks for watching, everyone. As a reminder, I will be in Vietnam next week and for the next 2 weeks until November 12th. So I will not be able to do as many daily videos. I'm still going to put out some videos, but to get daily information about Ulti and other things like WPay. I've created a Substack that's completely free for you guys to subscribe to, and you'll get the information in written format. The link to that Substack is in the description of this video, so go ahead, click it. And thank you so much to everyone who's subscribed to it so far. Awesome to see. Appreciate you guys, and you'll be getting an email very soon recapping some of the things about Ulti. So thanks for watching. Take care.